Good afternoon and welcome to today's webinar, Code 139 Disaster Relief Payments. My name is John Sheely with Tax Practice Pro here in New York. And our speaker today is going to predominantly be the fabulous Fred Stein of New York, Cobleskill, New York, Roseville, California, and a couple of other places in between. Good afternoon, Fred.
Good afternoon. How's everybody doing today?
Me, I'm doing fine. I am wearing, though, my Ellie Jones t-shirt.
There's no crying in tax season, Miss Kimberly Ellie Jones.
That's right. So a couple of housekeeping items, and then we'll get going. Obviously, you can see the question and answer tab to the right-hand side, along with all of our handouts. If just to let me know that you're hearing us and that all is going well, if you would please just say hello in the chat for me. Maybe tell us where you're from. Thank you very much. I'm seeing all of us coming in. Thank you. All right. So a couple of thoughts. This course is eligible for continuing education. You will get one CE if you logged in with us for 50 minutes and answer 2 of the 3 polling questions. You'll get your certificate via email in a couple of days. Please don't ask me for it Monday morning. We will do that. We will do the IRS upload. You will get an email from Simple Cert, which is our provider. And just log in. You'll be able to download the certificate. If you don't get that by, let's say, Wednesday, go check your spam. It may have gone in there. If it's still not there, please call or email. The best one to email here is Nicole, Nicole, at taxpracticepro.com. She will love you for it. And we can just push out the duplicate to you via email. Also check what email you're sending, you've registered with. Here's a copy of the certificate, what it'll look like. No big deal. And again, to earn the CE, you'll be eligible for one IRS CE. That's a typo. There'll be 3 polling questions of which you need to answer 2. You do have to be logged in for 50 minutes. I can't make an exception on the 50 minutes. I can't make an exception on the polling questions. We have to test that you are, in fact, logged in. That's a NASBA rule and an IRS rule. I trust you. Fred trusts you, but these are IRS and NASBA rules, as Fred can attest to. NASBA's not nice folks. I'm going to turn this over to Fred in just a second. I see that everyone is able to hear us and see us. Someone is saying no sound. I would say if you're connecting, turn up your sound. Now they say never mind. If you have any problems during the course, you're best to be using Chrome as a browser. Because it's all in the browser, if you stop hearing sound or seeing us move, press F5 and it should move you along. So we're going to talk about how to apply Internal Revenue Code Section 139 to our clients' businesses, maybe how to apply it to our own businesses, and understand a bit of the law and legislative history of IRC 139. Now, something that's interesting here, I know I'm embarrassed, and Fred, I don't want to speak out of turn if you were embarrassed or not, but we were both in New York and working as adults, not to age us or anything, but I mean, I had a mortgage and a couple of offices in 2001, and I knew about this and I forgot about it. And it's only because Tony Nitti wrote about this the other day in Forbes, and I'm like, ooh, and it's still on the books. This is one of the laws that was passed in the wake of 9/11, one of the times in history where everybody got along really nice for about a week and a half, and they pushed everything out. And this was pushed out in order for employers to help employees because so many of us were displaced. Where were you then, Fred? You were in Cobleskill by then or no?
9/11, yes, I was I was in Scotia, New York, but I was no, I wasn't in Cobleskill. I just left working in Cobleskill and living in Scotia, doing my own little practice before I bought the Cobleskill one in 2007.
Got it. Okay. Well, this is one of those moments. I remember where I was standing when I realized that the towers were hit. I was watching CNN on the internet and was running really slow because everybody and their brother had gone there. So you have the slider here that you can start?
I believe so. I am technically improficient, so we'll see what I can do. All right, we're going to begin with talking about what is income. And pretty much the IRS comes with, unless it's otherwise provided, gross income means all income from whatever source we get it from. All right, including blah, 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 the following items. So we didn't post everything on these IRC sections. We're just going through a brief overview of the couple sections that apply here. All right. Payments received are taxable unless there is an exception. And what we're going to do today is talk about what that exception is as it relates to Section 139 and federal disasters. And I'm going to pause quite often to allow John any time he wants to jump in, and we'll go from there.
All good, Fred.
All right. So gross income shall not include any amount received by an individual as a qualified disaster relief payment. And what we're going to be doing here and through the course of today is discuss what types of payments we can give to individuals, employees, that can be deemed non-taxable, but still be a deduction on the businesses. Qualified disaster relief payment defined. All right. And basically, I'm not going to go into a lot of depth and read the code for you, but whenever we have a federally declared disaster area, that's going to kickstart Section 139. And as John said, this is something that goes way back, and I believe many tax pros have completely forgot about it after the 9/11 incident. We've had a number of federal disasters in upstate New York, flooding. We had Hurricane Sandy down in New York City, and all of those could have used these provisions. And we're going to give a shout out again to Tony Nitti for bringing this to everybody's attention, and everybody's now throwing this into all of their presentations.
Oh, I want to add one thing, though, Fred. If anybody listening knows Tony Nitti, he is invited to speak at any of my conferences anytime on anything he would like to speak about.
Okay. So the important thing that we want to talk about here is what we can do with this. And Section 139 says that we can use it to reimburse or pay reasonable and necessary personal, family, living, or funeral expenses incurred as a result of a qualified disaster. And number one is the area that we're probably going to be focusing on, because number two pertained more towards the natural disasters, the hurricanes and floods and whatnot. To reimburse or pay reasonable and necessary expenses incurred for the repair or rehabilitation of a personal residence, or repair or replacement of its contents. Right. This is COVID-19. We are not dealing with loss of homes or disasters or destruction of things at this point in time. So we're going to be focused on how this applies to Section 1 above. All right. When we talk about a qualified disaster, we are looking to Section 165I-5A. And basically, in a nutshell, if the president declares an area a federal disaster area, this stuff applies. When we have a federal disaster and we give out payments under Section 139, what it's stating to us is that it's not going to be treated as net earnings from self-employment, wages, or any type of compensation. Basically, what's this saying is we as employers can provide payments to employees, and they will not have to pay any tax on that.
So wait a second, Fred. Is that the best of both worlds?
It can be, and it depends what you're going to do. And you cannot use this to replace what you would otherwise pay them as compensation. So you can't be paying somebody $1,000 a week, and then you come say, "Hey, I'm going to pay you $500 and give you $500 of Section 139 payments." That's not allowed.
Right, got it. Hey, can I throw in a polling question right now?
Anytime you want, brother.
All right, remember, folks, 2 out of 3 polling questions, and try to be really cool about what we're asking. So today's question is, what is your designation? 7 of 9. No. Enrolled agent, CPA, tax professional, interested observer. I know we actually have a few interested observers on today.
And you left out that some of us are both.
I know, we could have done that. And then I get, you didn't do this combination, you didn't do that combination. I can also choose to let them choose more than one. Then I get emails, you didn't tell me I could choose more than one. And it's like, I just win.
Are you saying people actually complain to you?
About everything, my man. All right, everybody has actually voted, and it's interesting. 68% of us are enrolled agents, 21% are CPAs, 10% are tax professionals, 1% are interested observers. Very interesting.
And
So,
there's even an attorney or two out there.
yeah, I didn't think to throw that on there too, that you're right.
I didn't think we would have let them in.
There's at least 2 that I saw on the list. So, okay.
All right. This one should be obvious to anybody. We cannot use it as a double benefit. So you cannot take a deduction and then also utilize it to offset other items as well. Okay, so if you're excluding it in income or you're taking it as a tax deduction, you cannot compound that with, let's say you get insurance reimbursement, or in the case of the new Stimulus Act, if you get payroll reimbursements, you cannot utilize that for these types of items. Now, what does this mean? Because these are going to be qualified disaster relief payments, they're going to be deducted by employers, and some of us are employers as well, and they're not going to count as taxable income to the employee. Absolutely no payroll tax implications. All right. Keep in mind here, we are talking from the federal standpoint, and some states, you got to be aware of how they may view these and or tax these, okay? Because we're talking from the federal level today. The big thing, what can we use this for? A few slides back, we talked about reasonable and necessary. And that is where most of our conversation is going to be, is what is reasonable, what is necessary. What it actually explains within Section 139 and other areas, it says medical expenses of the employee that are not compensated for by insurance. Again, that double benefit we were talking about before. For example, employees deductible and out-of-pocket expenses. Cost of over-the-counter medications and hand sanitizer. Hopefully, we're not going to have to deal with funeral costs for any of our employees or any of our clients' employees, but those would be covered as well. Section 139 is a very short section. There is not a lot of guidance on this. It has not been widely used. And as such, there's not a lot of restrictions on this either. So as long as you keep it reasonable and you're not giving somebody $1,000 for some hand sanitizer they find on eBay, I think you're going to be okay.
Hey, Fred, I wanted to add 2 things there. I looked, I didn't find any court cases. I didn't find anything published that talked about this. Did you?
I have not, and granted, I am not the best researcher from that point, which is why I bug you and Mr. Kevin Houston all the time and have you guys do some of my research for me, and then I just glom onto that.
Right, but I mean, I didn't see anything in any regulations, and I didn't see a Q&A, which could have been gone. It's 20 years later. And I didn't find anything on point in tax court regarding disaster relief payments where they had been denied or limited in any way.
The only Q&As that I found were talking about what you can do, and none of it said what you cannot do in relation to limits.
Interesting.
Yes. Costs of enabling employee to work from home. All right. And if you have employees working from home, which a lot of us will have remote people now, as an employer, you can buy them the tools necessary to do that. If you're buying it for them, in other times, that would be deemed income because you're paying for their items. In this case, it falls under Section 139, and you would not have to declare income as the person receiving that equipment. It doesn't make sense if you are a escort and also an employee and you're buying equipment for yourself, because you're going to get that deduction anyhow. So it doesn't make sense for you to go out and buy all sorts of equipment that you wouldn't buy because you're not going to have to pay tax on it. Childcare. If you can find daycares and childcares that are open or somebody to come in, you could pay that for the employees. All right. Increased transportation costs, which we're probably not going to have as they're remoting in.
Hey, Fred, let me ask you something here. This came up before, and I know we talked about it. So what if I've got 4 employees all working from home, and 2 of them have childcare issues? They can't afford the additional childcare costs because the schools are closed. They need childcare all day. One of them is a key person. I need that person working and committing. The other person, they're a good employee, but generally speaking, I could have someone else do their work and redistribute it. You know, the fact that they can only work 10 hours because of the childcare issue doesn't impact me, but this other key person, it does. May I discriminate and give one person, let's say $5,000 in child care payments and not pay anyone else?
From everything I've read, there is no discrimination testing. It does not state that you cannot discriminate. And as you said before, we don't have any court cases talking about this. I would imagine this is going to be used a lot more this year. And whether the IRS goes forth and has some tax court rulings on this going forward, we don't know that yet. But nothing I have found has indicated that we can't do this.
I tend to agree, but I wanted your insight on that. So, okay.
John, I want your opinion on this. Shelley asked, does paying child care to a person coming in to open up the domestic employer door, would they have to deal with a Schedule H if they're bringing someone in for child care?
That's amazing. Well, the first thing is I would probably offer to make the payment. I don't know. I was thinking I would want to make the payment directly. I think we have two separate issues here, right? Issue one is us giving them the money on a tax-free basis.
Mm-hmm.
Issue two is their payments to that person. So I would say, yeah, they have a Schedule H issue as a household employer. Yeah.
I agree. And yeah, so we're definitely going to stop and answer some of your questions as we go, if we catch them. Rodney asks, can you buy a computer for employees' children because the school is forced to do online learning? I would say yes, if this is going to allow you as the employee to continue to work for me and keep that child occupied, then I would say yes. The key here is there isn't a lot of guidance. We just, you're not going to give an employee money to buy a brand new car. That's probably going to get thrown out. But something like another computer for the child or an iPad, I think that's acceptable.
I think the real key driver here is documentation. So that's great to do that today. But a year and a half from now, if there's an examination of the return, the employer's return, how do you prove that? So I would want from the employee documentation the school is closed. I don't know how you document that you don't have a computer, but maybe a contemporaneously written statement. Dear employer, I lack a computer. If my child needs homeschooling, is there any way? Oh, I have one better one. I have one computer which I need to use for work. My child needs to be homeschooled and would need to use that computer. How can you assist me?
Mm-hmm.
I'll buy you the iPad or the Chromebook, right? And that would so you'd want something contemporaneous and to document it. Of course, by state, it's easy. There's written documentation about when the schools are closed. I would want to get that.
And we did not have this ready for the handouts today, but we will give you some sort of document that you can give to your clients and use yourselves, which will, as somebody asked before, be similar to the accountable plan. The section code does not require us to have a written plan, but we are recommending one strongly, just for backup. And it's good practice to have one. Some of these questions, as we see them, we're going to ignore because they may be answered later on in the presentation, and we'll go from there.
Yep.
Marie Zumwalt asks if we can use this for self-employed. Unfortunately, for Schedule C individuals, and we're going to talk about this later, this does not apply. You can do that for employees of the Schedule C, but not for the owner. If you have an S Corp or a C Corp, you're an employee even though you own the place. So you can do it for that, but Schedule C people, for yourselves, I'm sorry, you're out of luck.
Run into a late S election. Well, actually, that's interesting, right?
You can do it now.
So let's talk about this, just if you don't mind, because the whole idea here is we don't want to it's a big deal to get through the slide deck, right? The idea is the planning and thinking outside the box to make this work for people. So how about this, Fred? I think that based on COVID-19, notice Revenue Procedure 2013-30 allows for a late S election, provided you've done everything you're supposed to do to be an S, except file a 2553. And what's your reasonable cause? Gee, I think COVID-19 is a nice reasonable cause. And if you're working with clients right now, could they file an S election back to January 1st? Probably. And if that makes a difference for them, I might do it. I know there's all sorts of craziness out there on the internet about sole proprietors running out and getting crazy ways they're calling becoming an LLC. I don't know if becoming an LLC is the answer for some of this, but becoming a corporation, taxed as a corporation, may well be. So.
Okay. And for those that weren't paying attention earlier, yes, states can decide to tax these payments, Ellie.
Although I think most of them are not going to, because the whole idea here is to put money in people's pockets. So
I would imagine most of them are going to follow what the feds do in this
I'm,
case.
I'm concerned more with workers' comp, and I did call my comp guy. He didn't call me back.
All this stuff needs to be sorted out, and over the next week or two, I think we're going to get a better handle on everything.
Yep.
All right, we talked about a little of this before, and what should you have? We want to have a plan detailing your intentions for paying employees for this. Again, not required. It's recommended just in case an IRS exam comes on. All right. You can include in this plan how much you will pay and to whom. Again, it could be discretionary. It could be arbitrary. It could be for everybody. You want to have a start and end date for your Section 139 program. At this stage, it's as long as we have a federally declared disaster time period. Maybe you put a general list of expenses that we pay to reimburse, or maybe you just give them living expenses. It did state reasonable living expenses. So theoretically, you could just give your employees $500 a month to pay for those expenses. They can use it for whatever they want. You're defraying their costs. We think it's best to have individual documented expenses, but it doesn't state you have to.
But
Again,
it does say increased costs, doesn't it?
In one case, it says increase. In one case, it just says reasonable living expenses. Looking at B1, to reimburse or pay reasonable and necessary personal, family, living, or funeral expenses.
Incurred as a result of the qualified disaster. Okay.
Exactly. And it doesn't say increase. Other places say increase. This doesn't.
Okay.
Okay. As we just said, you decide whether you want your employees to substantiate or you just want to give them extra money. Now, remember, this isn't replacing salary. So if you're already paying somebody as an employer, you're being generous during these trying times and you're giving them extra cash, extra money so that they can get the extra things they need so that they can be there for you and your clients or your clients and their clients and move forward with this. All right. This goes back to what somebody asked earlier. I believe it was Marie. What about, oh, I'm sorry, Amy Lawyer asked this. Hi, Amy. What about S-Corps officers and employees? This can absolutely be used for S-Corp officers. There is no 2% rule here. You can absolutely use it for yourself and your employees. So this also talks about increased utility use for working at home because we are all spending more money at home. We're turning the heat on, the air conditioner if you're in Florida. You're doing more dishes, you're doing more laundry at home because you're just there. So all of these things add to your costs. You can base it on that, or you can just give some kind of arbitrary amount as long as it's not unreasonable. Okay, a partner in a partnership. That would be akin to a Schedule C. If you have no employees, you cannot give that to yourself. John, Shirley asked if you laid off an employee, can you still use this for them?
I wouldn't say I was reading that and my thinking would be for expenses you paid prior to the date of termination, but it's not supposed to replace wages. So I would say no.
Right. You shouldn't be using this, putting your employees, tell them to go on unemployment, and then you giving them extra money on top so in the hopes that they come back to you.
Right. Or just to be able to make it all work, make your business work, right? Your best example is the increased costs of utilities because all of a sudden everybody's home all day long,
Absolutely. So what are the drawbacks? Really, are there any drawbacks? All right. The law says expenses must be reasonable. What is unreasonable? What's unreasonable to one is reasonable to another. And that's where we need to use our judgment and decide what is reasonable, what isn't, and use this accordingly. All right. We're not going to tell you that it's going to be the Wild West out there. We got to tell you to use common sense and to do what's proper. Don't be using this as a way to write yourselves checks for $5,000 for no absolute reason.
So Corey asks, In theory, as an S corp owner and employee, can I pay myself reasonable living expenses under 139? If you read the 139B, says incurred as a result of, get off of Facebook there. Darn it, do you have it in front of you, Fred?
I do. Qualified disaster relief payment defined. Means
139B, I think you need.
B, you're talking B, qualified disaster relief payment defined. For purpose of this section, the term qualified disaster relief payment means any amount paid to or for the benefit of an individual to reimburse or pay reasonable and necessary personal, family, living, or funeral expenses incurred as a result of a qualified disaster. So these expenses must be incurred due to the qualified disaster.
Right. Now, in Corey's case, being stuck at home, additional utility costs, just all the things incurred because you're stuck at home. But I guess they can't be your normal expenses. They have to be incurred as a result of the qualified disaster.
Correct.
I never thought I would ever say this, Fred. You have to be a little creative here.
That's usually my tone.
That's usually your tone. But the way I would approach this, and forgive me if this is a little bit later in the presentation, the way I would approach this is going back to your example about running out and buying a computer for yourself. And that, something you were going to deduct anyway. I would approach this that clients should say to their employees, what are you spending your money on? Rather than saying, what can I do to make this work or give someone money? Because they know what they're spending money on, what the extra costs are. Donna is asking, so delivery charges. Yeah, if you're using, here ShopRite's the big supermarket chain, but if you're using ShopRite at home, and they're delivering, it's like 15 or 20 bucks. Yeah, I would say that's clearly a payment that's going to qualify because it's something I am incurring that I would not otherwise incur because I have to work from home. I don't have daycare. I'm concerned about catching COVID-19 by going out. Some of the stores here are only letting 50 people at a time into the store. So ask the clients and use outside. Shelly's saying increased grocery, meal, and delivery costs. Same thing, yes.
You're eating more at home. You're doing more at home. So these are going to increase your home costs. So we believe those would be eligible for the payments.
Yep. But again, the point of that little thread was to, rather than sitting there and trying to come up with an all-inclusive list, your employers should ask the people they want to give the payments to, what extra costs are you incurring? What are you spending more money on? And go from there.
And in many cases, it may be alcohol because you got to deal with your family. So there you go. Your bar bill's just covered. And Leah just stated that at the same time as I said that. Now there's
no comment.
This does not apply to severance pay. Okay. Again, we've stated this over and over again that this is not a replacement for income. Do not pay your employees less and then substitute that with this. All right, we talked about section 1. We're going to law and analysis of what brings this in to 2003-12. This was still in relation to the World Trade Center bombings and clarification as to what people can use this for. And we talked about what is income. And Joyce Chang wants to know how many days in quarantine with a spouse is justified homicide.
1.
Yes, for some it is 1, Joyce.
Let's do a polling question.
Yes, let's do a polling question here.
Oh yeah, let's do the polling question since we're talking about it. But that's. Oh, all right. Remember, you have to answer 2 out of the 3 questions. You don't have to get it right, although we hope that you do. Internal Revenue Code Section 61A says that all income is taxable unless disaster relief payments aren't taxable. The IRS prohibits tax-free payments. We should have said we don't like to be code heads, We just give it because you have to.
What's scary as I'm getting older in this, I'm beginning to remember these, and I don't like that.
Okay, we are not quite there. Is anybody else going to vote? A couple of people short.
I'm going to answer William's question. Employees furloughed normally works full time. Now is only working 10 hours a week due to shelter in place. Can 139 be used to help with expenses that they can no longer cover due to lost wage, salary, income? I do not believe so, but there are other programs out there that are going to cover that scenario. And I'm assuming as what we're doing this weekend, what John's doing this weekend, and what everybody's doing this weekend is we're looking at what the stimulus package has with all the payroll options, what Section 139 has, what the SBA loans are, and what the unemployment is going to have for us. And what we need to do as tax professionals is create some sort of matrix of how all of these areas interact with each other and then utilize them for both ourselves and for our clients. John and I have talked about putting together a small group of 10 or 20 people to try to think tank this and put together something and create this. And I believe we're going to do something like that. And we'll be able to talk about this sometime next week.
I think so too. I think sadly there's too much to do and too much to look at. So just back, let me finish the poll and then I want to make one comment on that. So sadly, about half of you got this wrong. So 61A, no one answered C, but 54% said all income is taxable unless, and that's the true answer. And we talk about that all the time, at least for me in marijuana cases. But disaster relief payments aren't taxable is not covered by 61A. That's covered by, Fred?
10.
Disaster relief payments aren't taxable, Fred. What section?
I was reading the stuff. You caught me off guard.
139.
Yes, 139.
So we got that half wrong. So back to the comment about this gentleman who's only working 10 hours a week due to shelter in place. I might go back to him and say, to work these 10 hours, what additional costs are you incurring? And, maybe the employer can give him some money that would otherwise qualify for disaster relief.
Towards those 10 hours.
Towards those 10 hours, sure. Again, there's no cap here. There's nothing. It can't replace wages, right? So you can't base it on, well, the guy lost 3/4 of his pay. Let me reimburse half of that. That doesn't work. But if this guy can come up with a list of increased utility costs and other things that are occurring to him, you can probably make a payment.
And again, as long as it's reasonable and you don't go to excess, you can do something.
And incurred by the disaster. I would argue all these increased utility costs, because we're sheltering in place and stuck at home, may well qualify.
Absolutely. And that should be probably one of the biggest areas that we're going to be able to help the employees with.
Right. Increased utilities. Yeah.
All right. We're going to go again. This is analysis. Section 102 is talking about gifts. All right. During this process of the World Trade Center, the government was giving a lot of money out and people were trying to define them as gifts, but the government has an economic reality for giving such gifts because they want to bring the economy back online. So it's not actually a gift. The gift has to be given without strings. So none of these payments are deemed as gifts. There are actually strings attached. We're doing this to help our employees so that they can be our employees. Government grants in response to a disaster generally do not qualify as gifts because the government's intent, all right, is to relieve the hardship caused by the disaster, and the government can expect that economic benefit from programs that relieve business or individual hardships. All right. We're going to go into the situations now in 2003-12 that kind of pertain to what we're doing now. Employer R makes grants to its employees who are affected by the flood described in situation 1. And situation 1 was talking about how there's a flood and people are in a federal disaster area. These grants or payments will pay or reimburse employees for medical, for temporary housing, and transportation they occur as a result of the flood that are not compensated for by insurance or otherwise. Notice they throw an insurance in there because we cannot have that double benefit.
Hey, Fred, can I just interrupt you for 1 second? Because I want want to go back a little bit in the basics. So there's a question, how do you account for reduced costs? You aren't driving, commuting to work, etc. Well, Richard, that's not what this is saying, right? You're allowed to make payments to an individual to reimburse or pay reasonable and necessary personal, family, living, funeral expenses incurred as a result of a qualified disaster. Maybe we're focusing a little too much on the work side of this, Fred. I mean, if my normal utility bill for my apartment is $100 a month, and due to these work orders, I'm there due to government orders to stay at home, reduce the workforce. You know, here in New York, most people are supposed to not be working. Your utility bill might double from $100 to $200. That would seem to qualify because it's an increased cost related to the declared disaster. So we should be able to make those payments to the employees under 139. What do you think, Fred?
I would 100% agree. And even in that employee talked about before, where they're only working 10 hours, their utility costs are still increased, so you can reimburse that.
Diane is asking, are we compelled to report 139 payments on the W-2 in box 12 or 14? No. We debated that, whether it was a code. Remember, Fred, we were debating whether it was a code L for reimbursed expenses, and it's not. This is just a point blank, plain old flat payment.
And it says, and I can't point out where it said it or where I read it the past couple of days, that this has nothing to do with payroll.
Correct.
It has nothing whatsoever to do with payroll, no payroll taxes, nothing. So therefore, we wouldn't put it on the W-2.
Now, going back to contemporaneous for a minute, having sat through enough exams when I worked for tax audit, the first thing, Fred, that you do when you have an audit, an office audit, is they want to see what? 14 what?
I don't know.
Oh, we got to get a private chat going. 14 bank statements, right? They're going to record all your bank deposit analysis. So one of the things I'm going to advise clients, though, Diane, is that at the end of the year, we probably should send a letter, you know, a contemporaneous document. Dear employee, during 2020, I made payments to you totaling X dollars that I've excluded from your income under Section 139. Don't put it on your return. Don't let another preparer put it on your return. Don't worry about it. Because I'm wondering how many people are going to go into a return preparer and say, my boss paid me this money, no W-2, no 1099. How much of that is going to end up on line 21 or Schedule C?
It shouldn't.
So I'm thinking, well, let's go back to what makes us different from our number one competitor, tax software, do-it-yourself software. So a letter, you know, giving the employees the information, I think that's the way to do it. Says me.
And I tend to listen to John mostly.
I'm just thinking out loud as we go through this. Anyway,
that's what this whole course is. We're all just thinking out loud, and the more questions people give, the better we're going to be able to help you.
100%. Yep.
Okay. Grants that you pay, or the payments you make for Section 139, are to reimburse employees, as we said before, medical, temporary housing, transportation expenses, and any other reasonable expenses that we can determine. This was specifically stated in 2003-12 in relation to the floods, and they're not compensated by insurance. It will not require individuals to provide proof of actual expenses to receive these payments. Right? We're recommending some sort of, you know, accountable plan or whatnot, and for some expense proof, but it's specifically stating in the question and answer that it is not required.
So there's a question, Fred. Where can we enter in the 1120S, 1120, 1065, or Schedule C?
Well, 1065 and Schedule C will only be if you have employees. So let's be clear on that.
Yep.
What I would do and what I'm going to recommend is that we're going to call these Section 139 expenses. We're going to make it clear and put all the money in there that we give to the people, and we're going to call it Section 139.
Not employee benefits?
We could, but that's debatable. We could put under employee benefits.
I agree. I always get concerned when you've got crazy stuff down on the dotted line. You know, you get a wonky number there to, you know, what does that do? Employee benefits, it's nice and buried. And I think it doesn't get a second look necessarily. But IRC 139 expense, yeah, that might get a look.
But if your employee benefits go from, you know, $10,000 a year to now $50,000, how does that look?
I don't know, but I'm just saying if I'm looking at one return and I see IRC 139, I might, I might ask. I don't know. I think the one thing is, I think you should be consistent across all your clients. Whatever your thinking is, that's what you should do.
So, Judy saying that employee benefits could be misinterpreted as taxable to employee. She likes Section 139 expense much better. Somebody else also, disaster relief payments. Anything you want to utilize, feel free to utilize. Different people are going to do different things. I prefer personally to stick it out there and let them look. And hey, we're auditing you because you gave disaster relief payments to your employees. I'm not going to like the IRS guy for that.
One thought though, the statement that employee benefits could be interpreted as taxable. No, because usually the employee benefits are not taxable. What goes there? The pension plan and medical insurance. So one other thought too. Oh, now I forgot it. I had a good thought. Oh well, move along.
The grants are not intended to indemnify all flood-related losses. It's not to make the employee whole after a loss. You're not going to buy them a new house or to reimburse the cost of non-essential luxury or decorative items. You're not buying them new lamps. Okay, this is part of the question and answer that the IRS put forth. The grants are available to all employees, regardless of length or type of service with R. You hire somebody April 3rd. All right, we're still in this disaster scenario. You can provide them with Section 139 relief benefits.
Hey, I remember the thought I had, Fred.
Okay.
Depending on what the 139 deductions you take are, do you put an 8275 on the return? Right? There's lack of guidance. Just a thought, depending how high it is, I pay for a couple of funerals, heaven forbid, that number could get up there. Just a thought.
Now,
funerals are clearly okay, so that's a bad example.
And that would determine on what is the industry-wide belief an 8275 does when you file it. I don't believe there have been many audits that occurred because one was filed. The representation people that do it a lot more than I do probably better answer that. But if I can avoid putting an 8275 on it, I'm going to lean towards avoiding that if I can. This is different than, some of the other reasons we may put an 8275 on, because it's specifically stated in the code that we can do this. But it's up for debate.
I don't disagree. My biggest concern is penalties, right? So if there's a $50,000 deduction, that could easily trigger a 20% penalty if any of it gets disallowed. So you weigh whether you want to disclose it or not. That's all.
And that's a good answer, is how much are we doing compared to our total stuff? And if that 20% kicks in, you definitely want to take that into account. All right, go to 2003-18, question 4. All right, they're using the World Trade Center here, but it applies to all federal disasters. Why are grant payments made under the grant programs not excluded from a grant recipient's gross income as qualified disaster relief payment under Section 139? They're saying, why are these not excluded? The grant payments under the grant programs are to businesses other than sole proprietors. They do not qualify for exclusion because the exclusion applies only to individuals. So if you were giving it to, this doesn't apply to independent contractors. I don't see where this would apply to a remoter you may have working for you like I do, because they are an entity and they're not an individual. Be careful. The grant payments under the grant program did not qualify for exclusion under 139 because the payments are not made for any of the specific purposes described in Section 139, 1, 2, or 4. This is not 139. This is part of the stimulus package, but it is something and another way that you are allowed to help employees. Section 2206. You can pay your employee student loans for them. So if they have a $600 payment student loan and you want to find a way to funnel them money, give them money for this instead of the Section 139 payments where there's that reasonable thing. There is no reasonableness or requirement for the student loan payment reimbursement. So if that's a better way to give them money, do that. It's going to achieve the same thing. You're going to get a deduction, and the employees are going to have money in their pocket to help them. All right. The 5250 cap applies to both new student loan repayment benefits as well as other educational assistance. So if somebody's going to college, tuition, fees, books, whatever they need to reimburse, you can do that. Be aware, in this case, the 2% shareholder rules do apply. So these were specifically excluded for S-Corp owner shareholders. Then, in addition, if you are paying your employees student loans, they do not get the student loan interest deduction come tax time for the amounts that you paid for them. We've been answering questions throughout this webinar, and we're here to take more questions for you as we go.
Remember, you do need to be on for 50 minutes. So let's at least make sure we have 4 minutes more material. So there's a question here, Fred, about there's a question about the 2%. I'm sorry, about whether the payments under the $5,250 need to be paid directly to the financial institution. I think the answer is no, but you need documentation, right?
I agree with you there. It doesn't state anything. If it would have stated that within the section that it has to be paid directly. You're allowed to reimburse them for that. If you are reimbursing them, I would get a copy of the monthly student loan receipts. In addition, there is, the interest is abated right now on student loans. You can give them a flat $5,250 towards their student loans if you want. You don't have to actually reimburse them for their student loan payments as they go. So payments of student loans, it doesn't say you reimburse them for their scheduled student loan payments. So we are going there and just, you have up to $5,250 that you can give to anybody with a student loan. And then you don't have to worry about the other aspects of it. S-Corp shareholder, somebody asked that question again. It does apply. It does not apply to a 2% or more shareholder. All right. Those rules do apply just like the health insurance and everything else does apply to them.
So there's a question for the student loan payments. What about employees that are related parties to the owners? Without looking, I'm going to guess that there's a mention somewhere to IRC 267, which is the related party rules. And it's very, Julie Babcock, if she's on here, could tell you stories about the interrelationship between who's considered an S-Corp shareholder these days. She had one where the children of an 2% or more owner were bona fide employees, and we confirmed that you actually have to report the health insurance on the W-2 in box 1, even though they don't own shares, but they're just the employees' children. So we'd have to look that one up. But I mean, do you have anything direct?
I don't believe anything on that regards. I agree with you and everything you just said there, John.
Okay.
Chris Fitzsimmons wants to know if there's a limit on the student loan reimbursements. It's not student loan reimbursements. You can pay up to $5,250 towards an individual student loans. Right. So it's not reimbursement. It's whatever you choose to do as an employer, as long as you don't fall under the 2% rules.
And of course, that's not part of IRC 139. That's a separate item in the stimulus package, and it does expire, sunsets this year, right? December 31st, 20 or 21?
Yes.
20.
At the end of this year, all of this fades.
Right. So yeah. So again, that was not part though of 139. This is something separate and apart that was relevant.
Yes. All right. Just going back to see if any other questions we might have missed. No, you don't get to see Leah, Kathy. She's staying in the background. And I believe there's going to be a recording of this, John. We are recording it now, and John's going to release it in some way, shape, or form.
No, because then they share it with all their friends. Membership has its privileges. They paid. Why should their friends see it for free?
All righty. So people that paid will get to watch the replay. Is that correct?
No, then they
Okay.
watch. I don't know what I'm going to do. Generally, I do not release webinars, and I think those that are doing that are doing a disservice to the rest of us because, to be honest with you, it discourages me from creating content. The fact that it's given away. So, and there is Julie. She was on here. That's too funny. Anyone else? Last call on questions. I got to ask one more poll.
Do the one poll, and I'm going to let Amber know that I'm going to tell you what I've told my children their whole lives. Life is not fair.
Tell me about this webinar. It was great. I hadn't thought about Section 139. I knew about it, but thanks for the CE. This wasn't the best use of my time. All right, so Fred, there is a question in the Q&A column. A lot of the questions were in the chat box. So, can I set up a pre-tax benefit for childcare without setting up a cafeteria plan? No, you have to have a written document and they have to defer their income. Although, if they have increased costs due to the disaster, you could choose to make payments to them. If paying through payroll, oh no, that was just there were just some further comments here. Okay, good.
So we answered that.
I'm thinking, Fred, though, seriously, I'm going to put the recording up on, yes, Corey, there were 4 polls. You must have missed one. I am going to put this up on, no, there were 3. There were 3 polls, yet answer 2. I'm going to put this up on YouTube, I think, Fred, unless you object.
I have no objection, so.
And that way the whole world can learn from our, whatever you want to call this.
Or they can use it to put themselves to sleep at night, whatever they want to do.
I am sorry, though, that some of you were unable to register for the event, but somehow got in from a link Fred shared. He must have shared his moderator link accidentally.
I might have done that.
Because the links they get are, your link is specific to you. That's how we track people. So a bunch of people are listed as guests. Don't know. Questions? I'm John at taxpracticepro.com. Fred, which email address do you use these days?
Fred at bqtaxpro.com.
Awesome. Everybody stay healthy, all right?
Be safe and don't touch your face. Are we done?